we think that we can, by changing the people who run the fund, also get new perspectives and disseminate kind of this learning opportunity to more people.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. Here's your host, Sylvan.
Cynthia, a very warm welcome to the Swisspreneur Show. It's a pleasure to have you here today.
Thank you very much for the invitation. I'm happy to talk about my background and about S2S Ventures specifically.
Yeah, you mentioned it. You are the co-founder and also board member at S2S Ventures, the first student-run venture capital organization rooted in the university networks of Switzerland. And before we actually talk about S2S Ventures, we want to learn more about your personal background. You have quite an international background. You studied in the Netherlands, did an exchange year in Milano in Italy, and you also interned in Germany and in Singapore. So I wonder, this is quite, a special setup, not the normal setup to be so international. So what has this international setup actually taught you? What did you take away from it?
So I would say I took several things with me. So I learned, for example, to quickly build networks with people you don't know. So you have to quickly learn and get to know people. You have to quickly understand different cultures and cultural backgrounds. I think also working in teams is a very important aspect, in very diverse teams. Mm-hmm. So these are very, I would say, most of the takeaways I learned from these opportunities.
You also have a broad professional background because you were actually active in the strategy consulting area. But then in 2012, you decided to leave the strategy consulting world and became the head of investment strategy and portfolio management at the Neue Zürcher Zeitung here in Zurich. So I also just wonder, how do you make such a transition, from strategy consultant to investment manager?
Okay. Yeah, I mean, it sounds very different, but it isn't, in fact, because from the strategy side, I was advising funds, for example, in their due diligence and in acquiring companies. So I had this corporate finance background, and then I applied it basically at the Neue Zürcher Zeitung as an investor myself and learned more the tools and really how to do the investments and build companies. So it was both investing and also setting up companies.
And at the same time, you also became active as a business angel, right? So did that also just go hand in hand, or what was your motivation to also become an active investor yourself as a business angel?
So I got more into contact via the NZZ role. I got more into contact with young startup, early stage startups, and I really liked the way how this works. And I started to experiment a bit and did one or two investments myself.
Yeah, one of them is, for example, View Ventures. We also had two of the founders on the show, Peter and also Fabrice. And I just wonder, what does your portfolio look like from a business angel perspective? Do you have any specific industry that you're particularly interested in, or what's your focus there?
Yeah, so I think View is an exception. It was a direct-to-consumer business and very successful. I really think it's a great team, great company. But since then, I've invested mainly in the healthcare sector, where I feel now pretty comfortable investing. And I have a good network and can leverage also on the technical expertise of other people. So I really feel comfortable investing in that field. And also in the sustainability field, which I'm going to explore further for myself.
Why are these two industries or focus areas particularly interesting to you? Because I think also on a personal level, you are a health addict, or you call yourself like that on a website or in an interview. So what is the personal motivation? Why are you so interested in first of all, healthcare or health in general, and also sustainability?
Yeah. So I think it's important. So from my perspective as a business angel, it's important to kind of combine my skills with really impact. And I think healthcare is an industry which is still very traditional and where there is a lot of room for improvement and innovation and impact. And sustainability is the same. So that's why I really want to focus on these areas. Yeah.
Got it. And what are the three crucial factors that you look for in a potential investment as a business angel?
So I would say, it's easy to say three crucial factors. I think it's more than three. But I would say, generally speaking, you look for really the outliers. So no investment has no risk or no weaknesses. Yeah. You always find something. So you have to look for something where you believe that this is an outlier and this can really become a big business opportunity.
Right.
And then you also look at maybe the weaknesses they have are manageable in a certain sense, right? But you cannot exclude all risks. So there can be market risks, like COVID came, so you cannot influence everything. So
it sounds very simple in theory, right? Identify the outliers and you will have like a beautiful return. But in practice, that turns out to be way more difficult, I imagine. So how do you do that?
For sure. So I would say no investor picks always the right bet, right? So there's always, let's say, less successful companies. Mm-hmm. But I would say that my personal network and my personal also value add that I try to also add to those startups is for me important. And that's why I'm then convinced that this startup can have a better, let's say, track record than others.
Are there any signs that you look at, in the early days? Because then it's super difficult to say who will be an outlier success and who won't be. So are there any indicators that you look at where you say, okay, this is the founder background or this is the market size or anything of that sort that you look at and say, okay, if these things are checked, then the chances to become an outlier are significantly higher than if they are not checked?
I would say so. In the phase I'm investing, which is pre-seed, it's important that the team has the, let's say, the edge to really win this game they're in. So and the team, this is very important. So you get to know the team when you work with the team, and so I like to really be close and work with the team and be active involved. Yeah. Otherwise, I wouldn't feel comfortable to make an investment. So I think that's for me the most important factor in the pre-seed phase. Yeah.
And how do you do that? How do you work with the teams, before you make an investment? Like, do you join them on a part-time basis, or how do you have to imagine that?
Yeah. The teams usually, they also select their investors, right? Yeah. So they also make their due diligence. So you are in a discussion with them. You really have to also pitch yourself to win the investment. If it's a competitive deal, you also, you can already in the early phase help them maybe find investors, maybe find the right people, help them setting up incentive structures. So there are several points you can work with them, and then you see how they interact as a team, how they go about solving the problem. So that's important indicators for me.
And how much time do you actually allocate to this? Like, do you say there's a trial period for 6 months or longer, shorter?
No, I would say it's shorter than 6 months. So you have to have the decision earlier, but it depends how early you are in contact with the team, right? Mm-hmm. Maybe they have a time frame of 6 months to raise their first round, then you kind of have more time. But if not, it can be also shorter. Yeah.
Okay, got it. But I think that's also an important takeaway for founders. Really plan enough time to give your potential investors the chance to get to know you and to also build some traction and
definitely
show some progress. Because if you just want to go out there and race from today to tomorrow, it's probably not going to happen.
Yeah, definitely. And you get to know your investors, which is also important.
Absolutely.
Right?
You also mentioned the smart money aspect. So what else are you actually offering, or how are you supporting your portfolio companies with the smart money approach beyond your pure monetary investment?
So definitely I can help them to set up, for example, incentive structures, to find financing co-investors, to really build product market fit. So I've seen several startups, and I've also helped to build several startups, so I can definitely help. And to be very concrete, in the VU Ventures case, I organized the Series B financing round of the company with 8 Ventures. So I think that's, for example, one of my historic,
It all comes back to the network that you mentioned in the beginning. So I think it's beautiful to see how the different career paths and your international background that allows you to build networks fast play in here together and actually make that possible.
Yeah, definitely.
Are there any red flags that you see when you make a potential investment that then stops you from making it?
I mean, there are red flags is a big word, but of course there are sometimes red flags. could be that the shareholding structure is not well distributed, that founders are not incentivized enough. It could be any market dependencies or risks that are very high. So it's really very diverse. I mean, it can be anything.
But also, probably really depends on the case to make that call. Have you ever regretted not making an investment?
I mean, there has been investments that I lost in the past. I would say that's also belongs to this, let's say, work or activity. Right. So you have to deal with it. But I think there are always great founders coming up, new startups coming up. So I don't, as a business angel, you don't have this pressure to invest. You know, as a fund, you have this because you have to deploy the capital. But as a business angel, you're more like, say, relaxed in terms of fund deployment.
Exactly. When you actually lost your investment, how did that make you feel? Because I it's part of the game, but when you actually go through it, I can imagine it's still probably harder than you would have anticipated before.
Yeah, it can be like a bit disappointing because you work or you invest time in the founders, in the team. So I think you also make your learnings, right? Yeah. Maybe to kind of have a good balance with the team, you know, and clear communication is very important, right? So I think that's part of the game, I think.
Sure. But, I mean, I think what you just mentioned is really important, that if the communication is good and you trust each other and you know, okay, we all gave our best, but it just didn't work, then you can also end it on a good note. You might have lost your investment, but then at least on a personal level, you feel like, hey, we did everything we could. But if that's not the case, I can imagine it gets way more difficult.
For sure. And most of the time, the investments come back, you know?
True.
So if you meet an investor, I think as a founder, you should be very aware that the second round or third round, you might want to win that investor again.
True. And I mean, especially here in Switzerland, where the community is still pretty small, so you just know each other, right?
Exactly.
And you don't want to risk that. Then in 2016, you also joined Wille Finance, a multi-family office. And I just wonder, you were active as your business angel, you did your own investments. Why did you decide to also go and work for the family office and do investments there instead of just becoming your own business angel and maybe launching your own fund or anything of that sort?
Okay, I think at that time I wasn't yet that, let's say, advanced in terms of learning, in terms of my experience. So I made 1 or 2 investments, so not really many. Yeah. So I would say that this was a great learning opportunity at the family office to see a lot of cases, to learn, make mistakes, but at the same time also learn from those mistakes. So I think it's a great opportunity, build out my network there. So it was a great opportunity for me too.
So please talk a bit more about the mistakes and the learnings that you took away from that time.
So it's very diverse, right? It's dealing with ventures. It's winning deals. It's on different levels, right?
But what was so appealing to you? I mean, you saw the learning opportunity, but there you also had a very diverse industry focus. Of course, there are some startups that you invested in, but also other companies, right?
Yes, so it was more on a later stage level, so Series A and onwards. So I could see, I mean, Series A types of startups, you also evaluate a little bit differently because you have more facts to check, more numbers to look at. Right. So you have a very more structural and analytical approach, while in the pre-seed phase, you also invest in the future of those companies and in the team's ability to realize that future. So
would you say, like at the pre-seed stage, it's really a lot about the team, as you described, the team that you invest in, basically, and then later down the road, you get more KPI and probably also growth focused.
Exactly. You get more growth focused, you get more KPIs, you have clear maybe benchmarks, you know. You can really make comparisons between startups and can really judge startups, right? And also, I would say it depends. I mean, it's also not it's not easier to get into Series A because a company is more visible or in a way has more traction. I would say it really is you really have to look at it and have to really decide then and try to win it if it's a good deal.
Were you in any of the companies that you then invested in the Series A? Did you do any previous investment in the same companies? Because that usually gives you a seat on the table, right?
Yeah, we did. So we have some seed investments where we did follow-on rounds in the Series A. Yes, of course. It really is, of course, a decision then later, like if you want to follow on or not, or how you do it. Yeah.
Right. And how do you actually make the decisions what to invest in with the family office? I can imagine that these are a bit bigger and more complex structures to reach an investment decision than being your own business angel boss, basically.
Yeah, that's true, definitely. But I think also in S2S, we will set up, let's say, also structures to really have the whole investment process structured in a way that you can really make sure that an investment is properly due diligenced and investment decisions are also done in a proper way or in a thoroughly way, right?
Got it. And yeah, you mentioned S2S Ventures. So after 4 years at Villa Finance, you then joined S2S Ventures in 2020. And it's the first student-run venture capital organization. And I just wonder, why did you decide to co-found that together with Thomas and Alex? What was sort of the lack or the need that you identified and said, hey, now it's time to really launch this initiative?
We think that at the moment, we see a lot of professional funds and a lot of funds that go very early into the pre-seed stage. And a lot of contact from the entrepreneurial clubs at the universities. They told us they get a lot of contact and outreach from funds. But what we don't see is any initiative that really brings together all across campus kind of initiative that brings together all universities. Yeah. And that's very close to the universities. So to tap into those networks. And that's why we think it's the right time now to start such a fund. And we see role models in the US that work very well, the Dorm Room Fund and other funds. So we see that there is a potential to do that in Europe as well. And we start with Switzerland.
Makes sense. And why are students actually the key for the further development of the startup ecosystem? What is their role and why are students so important?
Because students, they are very close to the university research. Mm-hmm. So they are close to their peers. They can identify easily investment opportunities. And the most important thing is they have an unbiased view on technology and technology trends. So they don't have this history of bad investments that maybe some venture capitalists have, and then they don't invest in that area anymore. Mm-hmm. So they are really unbiased, and they're embedded in the university networks, the clubs, where they can also tap and have access to their events, to their mentoring, to other activities or infrastructure that is important to also support those startups in the early phase.
Makes sense. And where did you actually meet Thomas and Alex?
So I met Alex. Alex was the head of the Auto ID Labs. That's an initiative of the University St. Gallen and ETH. And when I worked for Valora, we did together projects on customer loyalty and promotions at the point of sale. And He and his PhD students supported us in realizing those activities. Yep. So I had a very good impression on what the university and what the students can also deliver, right? Right. And Thomas was actually already on board when I met him, on board of S2S Ventures. And yeah, that's how we met. And sometimes, I mean, we met at events or juries or something like this, but we were never very close. But now we got to know each other better.
Got it. And then he said, now it's time to launch this initiative.
Exactly.
So please also walk us through how it exactly works, because the students, they're not only the investment focus, they are also the people who actually run the fund to a certain degree. So please walk us through how S2S Ventures actually works.
Yeah. So the students are part of so we set up a student team. So basically 2 students from each university, which is EPFL, ETH, and HSG. Mm-hmm. And we would like them to join the investment committee. So it's a balanced committee, cross-campus balanced committee. It's an autonomous investment committee, so meaning we leave the room. We are not in the room when they make their investment decisions. Yeah. They autonomously will also debate and negotiate with the startups. Mm-hmm. And we are only there as a board to guard like the investment process itself and the guidelines. So we set up the investment guidelines together with them. And that is basically the only framework they have. Within this framework, they are free to decide. And from our point of view, this is a unique experience for them to have a hands-on learning opportunity. And of course, I mean, we envision a very successful fund, but probably there will be maybe years that are less successful or investments that are less successful than others. So that's what we see and how we work together.
Right.
Before we continue with the show, we would like to introduce you to our new partner, Nuco. Nuco helps founders navigate the paperwork that starting a company involves. From the first consultation all the way to the commercial register, Nuco has helped more than 900 entrepreneurs start their company, and they do so at highly competitive prices. To find out more, visit nuco.ch/Swisspreneur. Again, that's nuco.ch/Swisspreneur. And now, on with the show.
And you mentioned this investment decision framework. How does that look like? Like what criteria, what kind of points do you identify and look at there?
So, for example, just to mention a few, but we would like to invest in teams, not in a single founder, or we would like to have a company legally structured, already established when we invest. So things like that. At the same time, we will leave enough opportunity, for example, to discuss valuations, right? So our students can discuss valuation. We'll not say you get a ticket of 20K and you invest in a convertible note, so you don't need to discuss valuation. Right. So this will not be the case. We really want them to learn and make this learning opportunity. So we will also, part of this whole initiatives, also to publish those investment criteria and set standards for the Swiss ecosystem. That's how we also want to make it more transparent. The whole VC, let's say, area, we want to make more transparent and also professionalize it more in the pre-seed stage.
Got it. So there's this certain degree of checklist, the investment process that you set up and the students run through it, but then they also have the freedom to really go out, negotiate, and have probably also their gut feeling involved with the final decision making.
Yes, definitely. That's definitely our aim.
Makes sense. And I also wonder, just in case if they make a decision and say, we want to invest in that company where you as board think this is a terrible decision, what happens? Do you interfere or what happens there?
I mean, I think startup investing is risky, right? Yeah. As such. So, and there will always be bad and good decisions. So we will not, that's part of the game, I would say. Right. But we think that with the students being at the front or at the core of this fund, we are able to have this unbiased view. And we really hope that this will make a different, will really make a different impact on the whole ecosystem. So that's why we are positive and we think that this will work.
Great. And how do you actually pick the students? Because I guess they are still actively studying, when they run the fund, right?
Yes, they are actively studying. So they can be undergraduates. We have undergraduates, PhDs, and master students. We see that they have to commit a certain time to this project, of course. And at the same time, we looked for people who are really curious about this, who have maybe former internship at VCs or startups, and who are really able to work also in a team, have maybe some experience already in the student university clubs. So we have a very diverse team right now. So really ranging from somebody who works on artificial heart in his PhD and runs the consulting club at ETH to a former HSG Start Global committee member. So it's really a diverse team.
Awesome. And what is actually your investment focus? Do you have any specific industry or, anything else that you want to focus on with that fund?
No, we don't want to set a narrow industry focus because, Switzerland as such is probably already not a huge market, but, has opportunities. So we would like to also leave them the freedom to really decide on topics. That's exactly also one of the mechanisms, right? If they think quantum is important and there are interesting quantum computing startups from ETH, we will invest in them. If they think biotechnology is important and there are some interesting opportunities there, they can invest in that. So we don't want to really set any confinement. There's also a differentiation to the funds out there, probably.
Right. And any focus in terms of stage? Do you want to also go in there pre-stage as early as possible, or do you also accept later stage investments?
Yeah, we will be the first money in, that's sure, because with our ticket sizes, which are around 20 to 150K, we are a pretty, let's say, small investor. So we want to start very early and really also fill this gap really in the beginning. So because we think that the most of the, let's say from a founder's perspective, this is difficult to find the first investor, right? So you don't usually you don't usually have a great network you can tap into. So this is the kind of gap that we want to fill. Yeah.
Makes sense. At the same time, I also think that, there are many business angels out there. So you probably also have quite some competition with all the business angel clubs and everything else out there. So how do you see that? Do you see that you do have any unfair advantages with the closeness to the universities, for example? Or how do you want to make sure that, the early companies, they can usually select and choose their investors? So how do you want to make sure that you get a seat on the table?
So first of all, we really want for the startups to really choose the best fit for themselves, right? So since we are independent of any angel club, of any fund, of any VC fund, we can really build a collaboration platform. That's also part of the vision, that we have a collaboration platform with VCs, but also with business angels, so they can co-invest with us. So we don't want to exclude anybody. We want to be really like actually helping those startups to find the best fit investor for them. That's our aim.
Yeah, I like that. That's cool. I also wonder, how do you then reimburse the students? Do they get paid for their time, or do they have like a classical fund? Is there a management and a performance fee, or how does that work with the students' time that they invest into building S2S Ventures?
Yeah, so we have thought this through. One of the aspects that we think is very important is to give back. So we designed the fund so there are no salaries, not to the students, not to the board. So nobody receives salaries. It's basically we invest our time and we believe in long-term profits. So the carry, that is classical. We have a classical structure. So around 2% management fee and 20% carry, and the 20% carry is then distributed half of the carry goes to the university clubs, because those university clubs are basically make sure or ensure that we have constantly a new investment committee, a new student team on board. Yeah. And they help us also with the events and other important factors for the fund. So we really would like to incentivize them on a long term with a carry. And and the other half goes to board and advisors. And and the management fee itself is really only for, let's say, operational costs of the fund and really running those events, etc. So we will see. And if we happen to have more management fees, we would reinvest them in startups.
Makes sense. Around the same time, I think on Startup Ticker, you were mentioned together S2S Ventures with the launch, but there was also Wingman with their campus fund that they launched. So some people got a bit confused, like, is this the same initiative? How does it actually differentiate? So what are the key differentiators between the two initiatives?
Yeah, I would say the most important differentiation is that we are independent of a fund. So meaning, without knowing too much about what the campus fund will do, but as far as we understand, it's like a seed fund for Wingman. for us, it's more, we see it more, our initiative as more independent. We want to collaborate with the other funds, meaning also with Wingman. So for us, it's a welcoming opportunity to do co-investments together. And also it shows us that we have the right timing, because there are more and more of these initiatives. And it's not only Wingman, it's actually in Europe, there are more funds. The Creator Fund, for example, in the Nordics, or there are more funds that are coming up now built by university students. Yeah.
Fantastic. Yeah, that's probably the question about the timing, why it's right. There's more coming, so it's about time we also have something here in Switzerland. I also would like to talk about the challenges and obstacles that you faced so far when building up S2S Ventures. The first one, I can really imagine that some people are a bit more, let's say, risk resistant when they say, yeah, let's put a lot of money into students' hands. So did you have any discussions or challenges about, sort of really getting people on board and letting the students make all the decisions about the actual investments? Were there any challenges or obstacles in that regard to really get the people convinced that students should make the final investment decisions?
So, surprisingly enough, we got the feedback to have like a very autonomous team, to really design it as being very autonomous, the students themselves. So there is very much trust in those students. Nice. And because it can only be a learning opportunity if we really leave the room, and if we are not in the room, otherwise we'll always have bias in the investment decision, right? So that's why we on purpose designed it like that. And also we think that the checks and balances are in place because we have those different university clubs represented, and the different universities represented with different interests, different like views also on those investment decisions. Yeah. I think this also is very interesting. And so we really believe that this concept is promising and will kind of regulate itself, right?
It makes you want to go back to university. I would like to also be part of that.
Yeah, definitely.
At the same time, students, they also very often change. So usually every 1 to at least 5 years, they change, they have a new role, or they start their own job and don't have time to commit to S2S Ventures anymore, for example. So how do you want to deal with that turnover? Because I can imagine that's also going to be a challenge, that you have to deal with many people in a short time frame, basically.
Yeah. I mean, that is also by design, it is meant to be like that, because we think that we can, by changing the people who run the fund, also get new perspectives and disseminate kind of this learning opportunity to more people, and kind of professionalize more this ecosystem and build more, like, say, future VCs or founders by doing that. Right. So that is really by design, and we really try, by getting those university clubs on board early on, to de-risk it. So to have them help us find and recruit those people. So the first team has been recruited by us. So we really decided on taking those people on board. But the next teams will, of course, be recruited by more and more by the universities and by the former students themselves, former VC students themselves. So we really think this will become a smoothly running, transitioning management team, so to say.
Awesome. Is there a fixed term how long they can stay there in that role, or how do you handle that?
So we would like them to be at least a year in the fund. Some can be 2 years, depending when their studies end, but that's the vision, yeah.
But at least when your studies end, you have to also leave the fund.
Yeah, that would be the case.
So probably you just didn't want to go for a PhD because it's a lot of fun. No, that makes sense. And I also wonder, universities, they're usually pretty defensive when it comes to opening access to outsiders, so to say. You're very well networked, also with Alex on your board, who has both HSG and ETH experience and roots, basically. Were there also any challenges there to get like official approval or support of the universities behind your initiative?
No, I think they are seeing this as a very positive development. Actually, even now that we started it, they are thinking of setting up maybe the ETH, some VC competence center or other things. Nice. So I think there is more to come. We'll see more. Yep. And of course, we are now formalizing our, with the university clubs and organizations, we are formalizing our agreements. But generally speaking, it's a positive trend we see, and a positive development.
I also like that, like the VC focus at the ETH, for example, as a potential development. That's really great for the ecosystem.
Yeah.
The other challenge I want to talk about, you also need money, obviously, to invest into these companies, right? So where does the money come from that you actually invest?
So that's a good question. Of course, we ourselves, we also invest in the fund. And then we mainly approached private investors that have a relation to the Swiss ecosystem and that really want to also kind of contribute to this ecosystem. So that see this as a different way to contribute to the ecosystem.
And how much money are you raising in total? What's your targeted fund amount?
Yeah, so the fund size is 10 million, and we'd like to have a first close at around 3 million, where we would start to invest as well.
Makes sense. When do you anticipate that closing?
So we anticipate that soon. And we are in the process of formalizing, or let's say closing those commitments. Yeah.
Got it. And how difficult is it actually for you to raise funds these days? Because, interest rates are at an all-time low. So people are actually looking for attractive potential investments. At the same time, it's new. You don't have the track record with that specific fund. Of course, you as a person have it, but not with the fund. So is it challenging? Is it tricky to raise these 3 to 10 million, or how do you experience it?
So we as a team have a very strong network. I think that helps, first of all, and track record. So this also helps. Of course, the concept is new, it's a new fund, and we have a new design of a fund, basically. So this both is challenging, let's say, but I think we explain it very well, and we have the perception that investors are also looking for something different nowadays, and not maybe as a standard VC fund. So we see it as a positive. We see some positive signs here.
Okay, that sounds promising. And let's also look into the future. You have planned to make the first investment still this year in 2021. Any guesses or thoughts about what that investment might be?
So we have a lot of investments in the, let's say, promising investment opportunities in the pipeline. And I don't want to tell too much about it. When we close the first investment, we will communicate, definitely.
Okay.
Yeah.
You plan to make that in September, October, or what's the timeline here?
No, that is a good frame, I would say.
After the summer break, we'll probably hear back from you.
Yeah.
And you also draw a bit of the vision about where you want to develop S2S Ventures to. So what are your plans over the next 12 months, but also beyond that? Where do you see S2S Ventures in the future?
So as I touched upon, we would like to not only run a Swiss fund, basically, but maybe become bigger at some point and connect European universities. So that would be really the vision. And let's see.
But where would you actually go first after Switzerland? Do you already have any country or university in mind?
So I don't want to, we didn't, there are many nice universities and strong universities in Munich, in Berlin. So there are these hubs, tech hubs, where you can really, I think, build this network. But we'll see where it takes us.
Got it. And also talking about the future, what do you think will be the biggest challenge that you will have to solve over the next 12 months?
Yeah, I would say we have to finalize the, let's say, setup. We have to get the team going and set up the operational running of the fund, basically. Yeah. And of course, finalize the fundraising. So get to first close. That's our next step.
Fantastic. We always like to close the episodes with a few other questions about the personal background or personal recommendations. So in that regard, do you have any resources or gadgets that you can recommend to our listeners? That can be books or blogs, podcasts, or also just gadgets that you use yourself every day.
I would say, if you're interested in investing, there are some interesting podcasts, Venture Village, or what I also like is more like leadership topics or book topics of Brené Brown. So yeah.
Good recommendations. And for the very last part, we always ask you some rapid fire questions. I give you either a short question or a choice between 2 or 3 options. And then you quickly have to make one choice and explain it in one sentence. Are you ready?
Yeah.
So how many hours of sleep did you get last night?
7 hours.
That's pretty good. Founding or investing?
For now, investing.
Seed or pre-seed? Or in your case, probably also Series A.
I would say seed.
Why seed?
Seed is a bit, let's say, pre-seed is always a very, let's say, very much unknown venture. Seed, a bit more. And yeah, that's a bit of a, let's say, you have more data points to check on.
So still enough upside potential, but also a bit more certainty, or at least a better gut feeling.
Yeah.
Makes sense. Where do you actually go to think?
To the mountains.
I like that. That's cool. And you've lived in many places, so I just wonder, what's your favorite place to live in the world, if you could choose any place?
Switzerland.
Of course, you have to say that.
No, that's really true. I love the mountains. So I'm an active mountaineer and a skier, and I love it. So I couldn't imagine a better place.
It's a pretty good place for that stuff.
Yeah.
Absolutely. Cynthia, thank you so much for stopping by today. It was a pleasure talking to you, and we wish you and the S2S Ventures team all the best and lots of success, and are very curious to see what your first investment will be later this year.
Thank you very much, Silvan.
Now that you've finished listening to the episode, why not top it off with a quick rating on Apple Podcasts? It's one of the best things you can do to help us reach more entrepreneurs just like you.